Hello, welcome to the Thursday Business News Report. It's now time to bring you the feature on the show today as we look at Nigeria's foreign reserves. The country's external reserves lost $350 million in just 2 weeks, falling to $34.9 billion on April the 29th from a high of $35.25 billion as of the 16th of last month. In a recent data released by the Central Bank of Nigeria, the reserves, which had been fluctuating, rose from $34.85 billion as of April the 1st before returning to a downward path in the middle of the month. The CBN had also recently attributed the improvement in the level of external reserves to the recent upsurge in crude oil prices on the backdrop of the renewed optimism on the successful deployment of the COVID-19 vaccines across the globe. In the month of March, the reserves had lost $178 million after dropping from $34.99 billion as of the end of March the 1st to hit $34.82 billion as of the end of March the 31st. Joining me now live in our Lagos studio to discuss this development and much more, I have the Chief Executive Officer of Finance with Mukta Muhammad. Good to have you on the breakfast show this morning.
My pleasure always, baby. Good morning.
We've been around the threshold of $34 to $35 billion, and it has been a downward spiral for a slight bit, but we are hopeful that we'll see a gradual bounce back. But do you share in the sentiments that on the back of oil recovery, we would likely hit that $42 billion benchmark, which was earlier forecast at the start of the year? This quarter two already?
Well, it depends on many factors, and one of those factors that is working to our advantage now, it has to do with the high price of crude oil. That will help our reserve. Then the other one that's working to our disadvantage, a high cost in crude oil, then also mean subsidy payment goes up because the government is still neither here nor there in terms of subsidy payment. So we have two ways that we are supposed to enjoy. But then when the price goes up, government is scared because that means more subsidy. Because NNPC just told us that they are paying $100 billion now for subsidy payment alone in every day. So that is huge. So we need to look at what the CBN is going to do, because if it depends solely on just the price of crude to get our foreign reserve to the position where we want it to be at $42 billion by the end of this year, we might be in for a shocker, because we need to develop other means, especially in the area of remittance and also attracting foreign direct investment. That is the major thing that has helped our reserve in the times of when we have shakings. As long as we are not attracting those foreign direct investment, we will still having those challenges, because just this morning from data we receive about, we've gone down in terms of foreign direct investment also. And even remittance that we used to think that remittance was going to improve, especially with the process that CBN introduced to attract Nigerian remittance, has also gone down also. So we need to look at those numbers.
But all of these is clearly hint to the COVID-19 pandemic. We cannot subtract that from the equation at this point in time. Economies are grappling with the same situation on ground, so we cannot expect increase in foreign direct investment or even diaspora remittances. But how then do we now diversify the already diversified economy with limited funds, with limited investment? How do we broaden our base?
I think we need to look at the service sector. The service sector seems to be one sector that can diversify the economy without putting in so much in terms of from the side. In terms of putting so much into it, because when you look at the agricultural sector, you need to build up the infrastructure, you need to make sure that the roads are good, you need to build storage facilities, you need to think about how reducing cost of production. But when it comes to the service sector, we're talking about using technology as a being to grow that sector and then attract foreign direct investors. If some of Nigerian financial sectors are already drawing that, if you looked at some of the numbers that have been coming in from that sector, you realize they are using technology to boost all of. So government should also begin to think about how can technology, especially using the service sector.
Do you think that's a far-fetched for now?
Well, it could be. It's not far-fetched, because if you look at what
going back with the funds that we have at this point in time and the limiting factor, we have a huge deficit. Even looking at the 2021
when I'm talking about the service sector, I'm talking about the telecom. I'm talking about the internet space. I'm talking about private players. I'm talking about government people in that sector to think how they can earn revenue. Look, the challenge is that government thinks revenue is only from crude, and we have been able to understand that the crude oil revenue is small compared to what you get in the service sector. You take a sector like Google, you take a sector like Facebook, you take a sector like Apple, you look at what they add in their economy in the United States, it's all from service sector. It's not rendered from that productive sector again. We are beginning to look at service sector, technological sector. So government need to diversify the economy as agreed. But if you look at our diversification now, we always just talked about the agricultural sector. We are not looking at other sectors that we think we have the manpower. Just this morning, I read through the news that the NCC, National Communication Commission, have signed a memorandum of understanding with Niger's Comms to make sure that we begin to have the 5G. Those are part of this that can boost the economy in terms of generating revenue in the economy. Also, because when you boost that sector, revenue generation, taxes in those sectors can boost your foreign reserve. That is how government are able to sustain their reserves all over the world, not definitely ordered by the natural resources that they have, but the ones that are able to attract with less fees.
We've already seen reports from April which have also highlighted the downward spiral middle of the month, but now we're already in May. Do you think we're going to see a further drop in terms of our external reserves?
I don't think so, because this morning oil price is almost hitting 70,
67, $68.
It got to 70 before there was a little bit downstream. So that could be good news. Now, what is the bad news? The bad news I keep saying, if you looked at the news also this morning, with looking at the possibility of that, whereby the 3 shares of government may have low remittance to them, is because of what we call the monster called the fuel subsidy. Exactly. So when you look at that by that, you are not so much confident unless we are able to address this monster, whether how much we are going to pay in subsidy, would there be an increment in fuel price so that we can begin to enhance this buoyancy that we are seeing in the crude oil price. Otherwise, once the crude oil price goes up, it's supposed to be good news for us. It ends up becoming bad news for us, because that means the cost of domestic fuel will have to go up, and then they will have a lot of opposition from the labor union, from average Nigerians, thinking that the cost of domestic fuel doesn't have to go up at this time because of their own challenges, economic challenges, the macroeconomic challenges, which have to do with no jobs, and most people have not even been able to get job after they lost their job during the pandemic.
It's been a long journey so far dealing with forex scarcity at this point of time in the country. What do you make of the current scenario we have, and what do you think we can also do to shore up revenue in the short term as well? You've made mention of the fact that we have to aggressively chase this agenda of broadening our base for inflow of foreign exchange, but in the short term, how do we address this forex scarcity, and then what do you think would also play out with the Monetary Policy Committee of the Central Bank of Nigeria to just stabilize the market? Once again, the conversation would just be around liquidity injection.
You see, the challenge has always been that CBN try to use all their tools.
Their wit and mind.
The tools. They are looking at the administrative tools, because initially, remember that we had such challenge. We brought in the import-export window. That has worked that time. It doesn't seem to be working now because of the pandemic. So CBN have tried to use the administrative tool, which they've tried by trying to attract diaspora, direct remittance from the diaspora, attracting them in terms of fee, in terms of giving them
Naira for dollar
exchange initiative. That has worked to some certain extent. That was CBN told us last month. You remember that they said that also helped in showing up the reserve, because if you look at that last month, you see that the intervention in the primary forex market was not very high. Now we expect that to be, because if you remember that the CBN also is not going to be intervening in some sectors, especially the wheat sector. They will not be attracting forex any longer. So that is supposed to help boost the reserve going forward. Now, the challenge that we have is that how can we begin to get the private sector to play that space also to attract? I've said it before in your program that we need to begin to look at the banking structure, the banking industry, the real estate, to come up with products that will attract investment from Nigeria, from the diaspora. Because what we've seen in Nigeria for diaspora have only been able to attract investment in the real estate sector. We need to get them into other sectors, whereby then the bank has to come up with products that will attract them, bringing their investment into Nigeria. That in turn will end up showing our base, because now we're only seeing government in one way, especially the CBN in one way, trying to attract them. They need to partner with the private sector, especially the banks, to begin to attract in terms of maybe reduction in fee and others. So those are the ways that I think they could attract foreign direct. The CBN Monetary Policy Committee have tried all they could. Now the economy is
pushed to the wall.
They've been pushed to the wall. So the CBN is not intervening in the auction market like they used to be. That's why we've seen the high rise in interest in the parallel market to about 480 because CBN is not 480, 485 because CBN is not really going to that space. So we need to begin to think of how can CBN begin to, CBN is doing their own part then, key in the private sector, especially the banking sector. They must come up with a product that will attract investment, foreign investment, into the country, and via that we boost our reserve.
We'll keep our fingers crossed to May 24th, 25th. That's when the meeting will hold, and then we'll see whether or not there'll be a new twist in terms of the narrative we have and what new the CBN will be bringing on board. Thank you very much for your time on the Breakfast Show this morning. Really, the campaign and agenda for stronger investment promotion is key if we need to shore up the economy and also have that balance, because we cannot ensure that we have our reserves, our cushion, properly set. Thank you very much once again for your time on the Breakfast Show this morning, Dr. Mohammed.